We're seeing the same very interesting thing happen every single day this week. Monday, we're kind of trading flat. Then towards the end of the day, boom, bump up. Tuesday, kind of trading flat. Boom, drop down. Today, trading flat, and another drop. So what is with these drops in the last hour or less than an hour of trading? Obviously, something's going on here. Looks like the market is either getting tired or excited. On Monday, we were trading flat, very calm-tempered day, and then people towards the end of the day were like, oh, shit, the pullback from Friday didn't continue, and they wanted to get into the market. Then Tuesday, kind of trading flat, everyone's calm, equal number of buyers and sellers. Then people are like, wow, we're too close to the all-time highs. I should just sell, take some gains. I bought at the bottom, let me take some gains. I think that happened again today. I'm not so concerned about the aggressive action in the last minute, and I'm more excited to see the calm during the rest of the hours of the day. There's a lot of uncertainty in the market. There's a lot of where are we supposed to be? It's obvious. I feel the same way. We're very high, and there's a very lot of economic damage, and we're in the middle of a pandemic. So for the NASDAQ to be within 1% of the year, and for all the indexes to be so close to all-time highs, it's a little concerning. What the heck is going on here? I think the market is a forward pricing mechanism. Now, it also accounts for some risk that can happen in this period of time. But I think the overall consensus is that we're going to be on the positive at some point in the not-so-distant future. There are a lot of people out there who say, the market should be down 50% and the worst is yet to come and we might get into a second closure. But let's look at the facts. So yes, the virus is terrible. It's a very bad virus. You don't want to catch the virus. It seems to be more deadly than the flu. But China has opened, and they haven't been so vocal on this. But not only have they opened, but economic activity has returned to the capacity where it can be. They open something up, people are going there. Now, I've heard that isn't the case with gyms, but then they reclosed back the gyms because people didn't want that. But it seems like everything else is good to go. Disney's opening up the Shanghai park. That's going to give us some insights. So it seems like in China, things are going well. Now, why is China not touting, hey, our economy is back and strong? Well, a lot of people here in the United States and the rest of the world are concerned about China and having this virus spread out of China. So if all these conspiracy theories are flying around and China's coming out saying our economy's doing well, we're back in business and everything, people are going to look at China and be like, what the, So I think that's why China isn't pushing this very hard. But it's good to see that their economic recovery has happened really quick. And I was looking at ads for the Spanish flu, and they're strikingly similar to the kind of messages we're getting now. 99% proof. A gauze mask is 99% proof. Don't be the idiot who doesn't have a mask on. They're a detriment to society. The messages are honestly worse then than they are now. And, after the Spanish flu, we had the Roaring 20s. So there are positives and a more optimistic look to be had based on the facts and the patterns in history. And that's kind of where I'm sitting. I am kind of skeptical. I do think we're very close to the all-time highs. I don't think a lot of stocks are cheap. I think they're at fair value right now. I think even before coronavirus, if you go to my first ever video, I said stocks were inflated. I think stocks were inflated then, and I think now we're at fair value. I like the prices we're at, Not high, not like I want to sell, but I'm happy I did my buying. I still got cash. And I have that cash as a hedge against possible downturn. There could be a little pullback. I think it's unlikely, but if New York decides not to open up on May 15th, that's a little bit of a reason for concern. California seems to be spiking. But I think a lot of the country is going to open up, and I don't think there's any taste to go back into lockdown. Once we get out and once we're back in summer vibes, people are just going to kind of be in the agreement like, we're going to have to go. And we're seeing that in the data. The price of oil is going up, not because people want the price of oil to go up, even though people want the price of oil to go up. The price of oil is going up because people are using oil, so the gas station supply is going like this. So people are buying oil. People are driving. People are getting out. They're not fearful. The fear indexes on coronavirus are going down. Seems like everyone wants to get back out, back into society, back into the world, back into America. Obviously, we want to do that safely. We want to do that as safe as possible. But the fact that people are in that kind of state of mind poses a good outlook to be had for the economy. So I'm overall optimistic. I'm ready to get out. I'm ready to get back into the city, see what's going on there. I see a lot of people chilling on the parks and everything. So, I wouldn't make too much of these end-of-the-day drops, even though I am closely watching. Would not be surprised to see a down day tomorrow because we've been calm, but there are a lot of bears out there. The bears still exist. So let's be mindful of the presence of the bears and work around that. Make your predictions for the future. Play the long game. Don't worry about taking a hit in the short term. Look at it as a long-term buying opportunity. Bet on America. Look to Germany opening. Look to China having already opened to get some insights into, are we going to open and how's our economy going to recover? The companies in China say they're doing pretty well. So until tomorrow, peace.